Welcome. In this video, we'll explore how to maximize your profits as an Amazon seller using a profit margin calculator. Understanding your profit margin is crucial for any business, especially when selling on Amazon where costs can quickly add up. We'll break down what a profit margin is, why it matters, and how you can use simple tools to calculate it. By the end of this video, you'll know exactly how to determine if a product is worth selling and how to ensure your business remains profitable. Let's get started by understanding the basics of profit margins. Profit Margin Calculator is a handy tool that helps you figure out how much profit you'll make from selling a product after subtracting all your costs. For Amazon sellers, this calculator is especially useful because it considers every expense involved, from product cost to shipping, Amazon fees, and even advertising. By using this calculator, you can quickly see if your product will be profitable or if you need to adjust your pricing or cost. Let's dive deeper into the specific costs you need to include. Calculating your profit margin, it's important to include all relevant costs. These typically include the product cost, what you pay to manufacture or purchase the item, shipping costs to Amazon or directly to the customer, Amazon fees such as referral, FBA, and storage fees, and advertising costs like PPC campaigns or promotions. Missing any of these can lead to inaccurate profit calculations and unexpected losses. Always make sure you have a complete list of expenses before you start selling. Formula for calculating profit margin is straightforward. Profit margin percent equals selling price total costs, selling price times 100. This formula tells you what percentage of your sales price is actual profit after all costs are deducted. It's a simple yet powerful calculation that every Amazon seller should know. By applying this formula, you can quickly assess whether a product is worth selling or if you need to adjust your pricing strategy. Let's walk through a real example. Suppose your selling price is 1,000. Your product cost is rupee 400, Amazon fees are 200, shipping is rupee 100, and advertising is rupee 50. Adding these up, your total costs are 750. Subtracting this from your selling price, you get a profit of rupee 250. To find your profit margin, divide rupee 250 by rupee 1000 and multiply by 100, which gives you a 25% profit margin. This example shows how each cost impacts your final profit. Make things easier, Amazon provides a revenue calculator. Start by logging in and entering your target price, which is the price you plan to sell your product for. The calculator will prompt you to enter your buying price, shipping costs, and other expenses. This tool will automatically calculate your expected profit margin, saving you time and reducing the risk of errors. Let's see how to use it step by step. Good rule of thumb for Amazon sellers is to set your target price at least 3 times your buying price. This helps ensure you have enough margin to cover all costs and still make a healthy profit. For example, if your product costs rupee 300, aim to sell it for at least 900. This strategy gives you a buffer for unexpected expenses and helps you stay competitive in the marketplace. It's recommended to aim for a profit margin of at least 20%. This ensures your business remains sustainable and profitable even if costs fluctuate. If your calculated margin is below 20%, consider adjusting your selling price or finding ways to reduce costs. Remember, a higher margin gives you more flexibility to invest in advertising or handle unexpected expenses. Don't forget to include miscellaneous costs such as product handling by FBA shipments. These can range from 10% to 15% of your selling price. Overlooking these expenses can eat into your profits, so always factor them in when using the calculator. Being thorough with your cost estimates will help you avoid unpleasant surprises down the line. Advertising is essential for driving sales, but it also adds to your costs. A good estimate is to set aside about 10% of your selling price for advertising expenses. Subtract this from your selling price before calculating your profit margin. This approach ensures you're not overestimating your profits and helps you plan your marketing budget more effectively. Use the revenue calculator effectively, you'll need to select the ASIN Amazon Standard Identification Number of your chosen product. This unique identifier helps Amazon pull up all the relevant details for your item. Make sure you choose the correct ASIN to get accurate cost and fee estimates. This step is crucial for precise profit calculations. Once you've selected your ASIN and country, enter your item price, miscellaneous costs, and buying cost into the revenue calculator. The tool will then display your expected Amazon fulfillment costs and overall profit margin. This step-by-step process makes it easy to see how each cost affects your bottom line, helping you make informed decisions before listing your product. Get a more realistic profit margin, reduce 10% from your selling price to account for advertising. For example, if your selling price is rupee 999, subtract rupee 99, leaving you with rupee 900 as your effective selling price. This adjustment ensures your profit calculations reflect the true costs of running ads and helps you avoid overestimating your profits. After entering all your costs and making necessary adjustments, check your net margin percentage. If it's above 20%, you're in a good position to sell that product. For example, a margin of 21.82% means you're likely to make a healthy profit. If your margin is lower, consider sourcing your product at a lower cost or increasing your selling price to improve profitability. Boost your profit margin, consider sourcing products from platforms like IndiaMart or Alibaba.com. These sites often offer lower prices, especially when you buy in bulk. By reducing your buying cost, you can increase your profit margin without raising your selling price. Always compare options and negotiate for the best deal to maximize your profits.